Wall Street showed remarkable resilience on Thursday. The stock market gave a muted response to higher than expected inflation data. Investors found out that inflation in the United States is cooling down slower than expected, and the labor market remains tense. Fed policymakers retain the hawkish rhetoric. Amazingly, the market still believes in the first rate cut in March. During the volatile session yesterday, US stocks opened higher and the S&P 500 briefly topped its historic high of 4,796.5 reached in January 2022. However, the benchmark indexes lost all their gains by the closing bell. The S&P inched down by 0.07% to close at 4,780. The New York pre-market was less optimistic today. The major stock indexes traded in the red. Futures on the stock indexes shed 0.3 and 0.5%, but the fresh macroeconomic data moderated pessimism. The baseline scenario for the S&P is an intraday corridor between 4,740 and 4,784 points. The lowest seller's target is seen at 4,710. The bulls find it important to the size targets at 4,791 and 4,810. Yesterday's move reflected an agitated market sentiment driven by disappointing inflation data and a strong labor market. Consumer prices rose more than expected in December as Americans pay more for housing and health care. A separate report showed that the number of people filing new claims for unemployment benefits unexpectedly fell last week to 202,000. The latest data immediately prompted more hawkish comments from Fed speakers. Cleveland Fed President Loretta Mester and Richmond Fed President Tom Barkin said that December inflation data did not convince them that inflation is now firmly back toward the central bank's 2% target. A fall in Treasury yields helped curb losses in the stocks after $21 billion auction of 30-year Treasuries was well accepted. In the corporate sector, Microsoft briefly overtook Apple as the world's most valuable company after the iPhone maker's shares tumbled nearly 4% year to date on concerns about falling demand. Nearly all of the 11 major S&P sectors were lower, with only energy and technology in the green, gaining 0.16% and 0.44% respectively. Cryptocurrency stocks reversed early gains to fall by 6.7% to 15.8. In addition, shares of key US banks went down ahead of the corporate earnings reporting season. Futures for the US stock indexes opened on a Friday under pressure. Rising tensions in the Middle East had a rather weak impact on the traders' sentiment, but the negative macroeconomic background was aggravated by the weak results of American banks. Thus, the stock indexes went deeper into the red zone. But let's discuss the good news. US producer prices unexpectedly slipped by 0.1% month-on-month, defying the forecast for a 0.1% rise. Cost of goods fell by 0.4%, marking the third straight decline, mainly due to the falling diesel prices and growing gasoline prices. Prices for services remained unchanged. Meanwhile, the core producer price index, which excludes food and energy, remained flat and was below forecast for a 0.2% increase, and the overall PPI rate rose to 1% on year from a 0.8%, weaker than the estimated 1.3% growth. A decline in factory inflation is a good sign for the stock market. Besides, some analysts noted that such data is more significant and indicative for the Federal Reserve. Whether the market will be able to enjoy soft data is a big question. The banking sector is putting pressure on market sentiments. The long-awaited start of the corporate reporting season turned out to be quite sobering. Bank of America shares dropped by 3.3% in pre-market trading after its fourth quarter profit fell as it borrowed and refiled the FDIC's deposit insurance fund, which was depleted after the collapse of regional lenders last year. JP Morgan Chase shares lost 2.6% as the lender's quarterly profit fell after committing nearly $3 billion to replenish the FDIC's fund. Wells Fargo's profit jumped in the fourth quarter, helped by cost cuts. However, shares fell by 2.1%, reflecting overall sentiment in the sector. Citigroup shares declined by 2.1% ahead of the quarterly report later today. Among other companies reporting results, Dow member United Health plunged by 5.1% due to the higher than expected medical costs, although the insurer reported upbeat fourth quarter profit. On the other hand, the energy sector is currently supporting the stock indexes. Chevron, ExxonMobil, and Occidental Petroleum each added nearly 2%. Meanwhile, the US dollar index spent most of the pre-market trading strengthening, but a fresh data on the factory inflation cooled dollar optimism. The US dollar index opened the New York session 0.10% higher at 102.38 points. The basic scenario for today assumes fluctuations in the range of 102.30 and 102.70. In the case of it going beyond the borders, the target for sellers will be 102.10, for buyers 102.93. The US dollar rose on Friday as traders wind mixed the US inflation report and tensions in the Middle East, where the US and British have launched air and sea strikes against Houthi targets in Yemen. The US dollar index has climbed by about 1.1% this month as a crucial economic data came in stronger than expected. However, cooling in producer inflation offset concerns from Thursday's data. Now, market participants reinforced their expectations of the early Fed's monetary easing. The more than 150 basis points of cuts this year are again fully factored into Fed funds futures. Global tensions and comments from Minneapolis Fed President Neil Kashkari may support the greenback today. On the back of the global fundamentals, the Canadian dollar has advanced against its American rival. The USDC pair is trading at 1.3355 or 0.26% lower before the opening bell. The instrument is expected to trade in the same intraday corridor as yesterday's between 1.3320 and 1.3380. The loonie found support today from the soft US dollar and the sharp rise in oil prices. Investors were keeping an eye on the Middle East, where the US and British strikes on Houthi targets marked the growing bailout from the war between Israel and Hamas. Oil prices jumped, with the Brent up 3.9% to $80.45 a barrel, but falling back below 80 as the US market opened. All in all, both benchmark rates are still trading 2% higher. The crypto market is focused on the launch of a Bitcoin ETF trading, which was quite successful. According to LSAG, trading volume was $4.6 billion. ETFs from Grayscale, BlackRock, and Fidelity dominated. As for Bitcoinism, managed to reach a two-year high, and after traders took profits, returns to the borders of the recent range. By the time of opening US financial markets, the crypto approached the level of 45,700. The intraday corridor for the token is seen between 45,100 and 46,600 under the baseline scenario. Going beyond these borders could lead to the price down to 44,700 and 43,500, or up to $47,200 and $48,100 and even higher. Our review of the New York session is over. Subscribe to InstaForex TV channel to get daily market updates. Good luck in your trading and see you online next week.